Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, March 9th, 2010. We start with a look at the euro-dollar pair, and as we can see from the chart, we fell in favor of the greenback in today's overnight trading until we hit support around 1.3550 when we entered the New York trading session. The main reason for the risk aversion were downbeat comments from rating agencies on Europe and the UK, and a bit of a dissipation of the rally that started last Friday when we had a better than expected non-farm payroll report. However, that burst of risk appetite ran into this resistance around the 1.37 level. If we zoom out the pair, which has been our range we've been stuck in this pair for the better part of 3 weeks. What we saw today was declining equities in Europe as well as weaker commodity prices. So that helped the greenback to gain, as it still does gain when we have risk aversion in the market. We see that our support held from last Friday's session around 1.3550, but we remain firmly within our consolidation zone between 134.50 and 137. We also have a bit of a downward sloping resistance level here. So the rally that we had spoken about to start the week did not materialize into pushing through any of these resistance levels. Fitch ratings said that Portugal may need a downgrade to its rating, and that it should not be assumed that Greece would be successful in implementing its budget cut proposals, and there is a possibility of sovereign default in the Eurozone. So those are the three types of news that can all severely impact the strength of the euro and snuff out any potential rally from the support level here around 134.50. We did see gold and oil prices cutting some of their earlier losses in the start of New York trading, so that helped the euro to bounce up here, and US equities, which started negative, did turn positive throughout the middle of New York trading. This video is being recorded around 11 a.m. New York time. Switching to the pound dollar, we see a similar dynamic, and we had a run up on Friday's trading, and then yesterday that rally stalled out around 1.52, and we moved to break a short-term upward sloping support line to start this session, and we reached a 1.4950, just below the 1.4950 level in overnight trading. So that retraced about 61.8% right on the dot of this rally of this fall we saw in last Monday's trading. So if we draw our Fibonacci from 1.4780 to 1.52, this is a 61.8% retracement now. So we'll see if this level holds, or if the new bearish phase in this pair means that we're going to extend our decline after a bit of a pullback and retest either this 78.6 level around 1.4850 or the 1.48 level. You can see more technical analysis about this pair at FXTimes.com, but the fundamental news that moved the pound today was Moody's warning that more UK banks could suffer further downgrades once the UK government withdraws its support, and Fitch said that UK sovereign credit profile has deteriorated. So these concerns have been in the market for a while and have been pressuring the pound as how will the UK deal with its fiscal deficits. A lot hinges on what happens in upcoming elections, and uncertainty there or the possibility of a hung parliament has been pressuring the pound as well. We also had some data out of the UK. We had a positive retail sales report from the BRC Retail Sales Monitor, but it was swamped out by negative RICS house price balance as well as a widening in the trade deficit. So negative fundamental pressure as well as the downbeat comments from Moody's and Fitch ratings has caused the pound to slide further, extending this decline from yesterday. Comparing the euro against the pound, we saw a bit of an extension of the rally in favor of the euro and against the pound in overnight trading up until about 6 a.m. Eastern Standard Time. We tested the 0.91 area, which was our resistance from last week, pretty much. And let me zoom this pair out. So you can see we had a very sharp run up in the euro here. And we have stalled out around the 0.91 level, and we have tested that as resistance in today's trading. We'll see if we approach that level again soon, especially if the pound continues to remain pressured. The sense of risk appetite in today's market helped to boost the dollar yen in favor of the yen, so it weakened this pair. Plus, we had some repatriation flows as the fiscal calendar in Japan ends at the end of this month, so exporters are bringing home revenue and profits, so they're demanding the yen in order to convert that. So we did have a break of our moving average, and we hit support around 89.60 as we did see the slide in overnight trading. Plotting a Fibonacci retracement of this rally starting on Thursday, we have retraced about 38.2% of it. Before we turn to some of our commodity currencies, here's a look at gold versus the US dollar, and we see that we've had a 2-session decline as gold hit as low as 1,100 a troy ounce. So as we mentioned at the top of the broadcast, as we had lower equities, we also had lower commodity prices. That did break this bit of a rally that we had seen 2 weeks ago. And let's see what the retracement currently is. We tested the 61.8% level, though right now we've moved back to the 50% retracement of this upswing. First, let's take a look at the Australian dollar US dollar pair, and we see that while we declined overnight, we found support rather fast around 0.9050, and the pair has managed to rally to retest its highs from yesterday's trading around 0.9130, so a very nice bounce back for the Aussie, showing that it has strength despite the decline in gold prices and overall risk aversion overnight. So we had moved above this important level, just below 0.91 in to start the week, and now we've retested it as support, even a little bit clear out action below that level, and now we are rallying again. So that's a pretty good sign for the Australian dollar, and that we can perhaps extend this rally that we've seen throughout February and start March, though we have slowed down a little bit. So we may see some consolidation. There are some zones like 0.9250 and 0.93 that the pair could test in the coming weeks. In our final pair for today, we look at the US dollar Canadian dollar, and we have seen how this pair slid rather sharply after it tested the area around 1.0675. We had some better fundamentals, and we had a more hawkish Bank of Canada. And this week, towards the end of last week, we had stalled around this 102.50 area, and after flat trading yesterday, we saw the greenback gain a little bit as a result of risk aversion. But as the New York session started, and we had a bit of a bounce back in U.S. equities after starting in the red, the Canadian dollar managed to pair its earlier losses, and we tested the 1.0250 level, just below the 1.0250 level yet again. So we know that following a sharp move, if we see this squeezing here, like this consolidation, it means that traders are waiting for the next move, whether it should be a retracement of this down move, or if we break past this pretty strong support at this level and push further down, testing our area here around 1.02. Zooming out this far, we see that our actual moves the past 5 sessions do look a little bit like a downward channel. If we draw it like that. So we seem to be trending down still in this pair. Now let's take a look at the fundamental docket for the next trading session. At 6:30 p.m. Eastern, Australia posts its WMI consumer sentiment, which it will follow with a measure of home loans, while Japan releases data on core machinery orders and inflation for corporations. Overnight, Germany releases data on its trade balance and consumer prices, while the UK releases its manufacturing and industrial production. Tomorrow, the fundamental docket is very light with just U.S. wholesale inventories in store. So that means that we may see continued investor sentiment be the main driver in the currency markets. So we have to see how equities and commodity prices do, and what happens as we approach some important resistance and support levels with some of our pairs. This will wrap it up for today's market recap. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you good trading.